Want to get approved fast without all the hassle? Well, being a first-time homebuyer does not have to slow you down. There are a ton of programs out there, a ton of great lenders, and I'm going to tell you exactly how to do it quickly, again, without the hassle. Let's go. When it comes to mortgage loan processing, we're talking about buying a home and getting financing for that property. The process seems daunting to people, and a lot of people are very intimidated by it, but it is not a hard process at all. You just need to know that they do want to approve you. Even though they're asking you for all of these documents and asking you all of these questions and all of this stuff, trust me when I tell you, they want to approve your loan if they can. So let's quickly go over the process. When you first start in the mortgage loan process, you are usually working with a loan officer, okay? They are the ones that finds people that want to buy homes, and they will take the application with you, and they will go over what's needed, what you qualify for, and things like that. So because they are in sales, they do not get to make the loan decision. So it's going to go to someone at the bank that works in the operations side. So your processor and your loan underwriter, they're going to be the ones that actually make the decision as to whether your loan gets approved or not. However, your loan officer is a member, he's an advocate of the bank, and he is there to help. So he is incentivized on your loan closing, and he is there to help you through the process and explain things to you, answer your questions, and of course, find more people like you that need loans. So let's talk about if you are renting or if you are rent-free, because for a first-time home buyer, this makes a really big difference. So in many cases, what they want to do when they're approving you for a loan is to make sure that you are able to pay that mortgage. And in many cases, if you've been able to pay your rent is probably going to be very similar to your mortgage. That's usually what they do. So if you've been paying $1,200 in rent and you've shown the ability to do so, then that is usually about the amount that they will give you for your mortgage. Maybe a little bit higher. We have something in the mortgage industry called payment shock, because we don't want to shock you with a new payment if you've been paying $1,200 per month, for example, and now your mortgage is $4,000. That's going to be a big difference, and that's going to be what's called payment shock because your payment has gone up so much. So if you are renting and you have proof that you've been paying your rent and that you've been paying an amount, that is a very good thing for a first-time home buyer. This is one of the benefits and the compensating factors that you will have when you go to the bank. Now, if you currently live at home with parents or you live with someone and they pay the rent, all is not lost if you are a first-time home buyer. Don't think that you can't get approved for a loan because you don't currently pay rent. That is okay. But just know that for the bank, that is another layer of risk. If you have been paying rent and you can show that you've been paying rent, you have lowered the risk for the bank. If you have not been paying rent and you've been rent-free for however many years, then the situation is going to be a little bit different. Now, again, not saying that you can't get approved, because absolutely you can, especially if maybe you were in college or you were going to medical school or something like that. Then that's going to be a different situation. However, if you were just living at home and you didn't work, now we are adding layers of risk, and then you probably are going to have an issue as a first-time home buyer. The next really important thing that the lender is going to look at that you're going to have to prove as a first-time home buyer is your employment, okay? They want to see that you have been employed for 2 years in the same line of work. So if you've gone to school or you've got some training or some education and now you're doing something else, that is totally okay. But the lender, for the most part, wants to make sure that you have been employed stably for the past 2 years with no major gaps, no major decreases in your income, and things like that, in the same line of field, or you're progressing in your career. That's a good thing, especially as a first-time home buyer. The next thing that's closely related to employment that they're going to check, of course, is the income. How much money do you make before all of the deductions, before the taxes come out and the 401k contributions and all of that stuff? And is the income stable? They want to make sure that you didn't just get this big raise for this big project and now you're about to go back to this other thing and now you make less money. Not only do they want the employment to be stable for 2 years, they want the probability of your income to continue for the next 3 years. No, your job cannot guarantee that you're going to work there for the next 3 years. But if you have been employed for 2 years and your income has been stable and growing, for the most part, they can determine and they can make the inference that your income and your employment is probable for the next 3 years. And that's what the lender is going to be looking for. And that is what the underwriter is trying to determine when they are looking through your pay stubs and your employment verification. The next very important thing, again, more related to income and employment, is also your debt ratio. They've already seen your credit report, so they know what your current liabilities are. They also have an estimate of what the new mortgage payment is going to be. And the lender is going to take that proposed payment, include it with all of the liabilities that you already have, and they are going to determine your debt ratio. They want to know what the relationship between how much money you make and the income that you earn, what is that relationship? And they don't want it to be more than half. Usually it's around 40% is what the goal is. You be very careful if you are employed by a family member, for example, or if you are self-employed, or if you recently changed job, or if you work seasonally and your income fluctuates up and down. That's going to be hard for the lender to determine your debt to income ratio. So you may have to explain some things, or you may have to talk with your loan officer about how you're going to document this. Because again, even if you are a seasonal employee, in many cases, if you've been doing that and you have a history, you can still get approved. When it comes to getting approved as a first-time home buyer, there's a lot of programs out there that a lot of people do not know about. And one of those programs are down payment assistance programs. So most of the times, if you've already had a home and you want to get a bigger home, you're not going to qualify for a down payment assistance program. But if you are someone that has been renting or has not owned a home before, there are tons of government, community, and local, state, even state programs and funds that have put money aside. There's literally even banks that have been sued, literally been sued, and had to put money aside to lend to first-time home buyers. So there's an amazing opportunity for you to get these first-time home buyer programs and not have to come up with any money out of your pocket. Now, yes, they want to see that you have employment and that you're making money and that you do have some reserves, maybe that you can save a little bit of money. Maybe even just 1 month of the mortgage payment is all you have to save. But start looking into first-time home buyer programs and into down payment assistance programs, okay? Because most people leave all of this money on the table, or they just keep renting year after year after year, thinking that they can't own a home. And we know that home ownership, now again, I'm not saying just homes that you're gonna live in, we're talking about investing in real estate and being a real estate entrepreneur, but you have to start somewhere. And when you start off as a first-time home buyer and you buy a good property that eventually you can even make into a rental property, you are on the right track. And the best way to do this is take advantage of all of the programs that are out there for first-time home buyers and buy properties and keep your money. So hopefully you got a lot of great information from this video. Please take a moment and like this video. Please subscribe to my channel. Make sure you click that little notification bell so you do not miss any of this content. This is Noelle. I am here every single weekday bringing you free content right here, full of information with resources, downloads, tips, secrets, and all of the knowledge that you need to be successful in your journey. This is Noelle, to your success.